But then in 2023, we had another liquidity crisis. It was called a banking crisis, but really that was SVB and First Republic and all the bank failures in 2023. But that was ultimately, again, a liquidity crisis. It wasn't a banking crisis. It was just the bonds that were the underlying bonds in the reserves of these banks had lost value because of higher rates. So that too was a liquidity crisis. And you fast forward to today, or the markets we've seen in the last week, and the extreme swings and the VIX at 52 and intraday trade moves of greater than 10% up or down. That is a screaming sign of another liquidity crisis. In other words, the grease necessary, the dollars, the treasuries necessary to keep a debt-based market and a debt-based economy rolling have all dried up. And so when we're looking at this, and we can get in more weeds of what Trump's effects are and the tariffs effects are, or what the Fed's response is going to be, or what the dollar is doing, it's very complicated, but it's all very simple. All of it stems from a country and a world over its skis in debt and not enough liquidity to match that debt.